All right. So I'm Markets and Mayhem. This is Back to the Futures with Markets and Mayhem, and we're going to be looking at really one of my favorite programs for trading, which is Bookmap, and how I use it to see some of the setups that exist out there in futures and stocks. And it can also be used in crypto, ETFs, etc. It's a pretty versatile program. Journalist disclosure, got to get through this real quick. All Bookmap Ltd materials, info, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. And the folks at Bookmap would love for you to join them on their Discord. I'm there too. It's a great server. If you're interested in learning more about how Bookmap works, how it can help with your trading, this is exactly where you should head to be able to sharpen that edge. I personally feel like learning the product, if you're a day trader, if you're trading short time frames and future stocks, ETFs, this is a really helpful program to be able to map out the liquidity in the order flow. So a little bit about me. I started trading back in 2005, dating myself here, been almost 20 years of trading. It's been a really interesting and amazing journey. Wouldn't trade it for anything else. I funded my own account, began trading stocks, then moved on to options, futures, commodities, and Forex as I expanded my horizons. In 2006, I started rolling my trading profits into long-term investments. And folks out there, I mention this every time because I'm really hoping to encourage you all to do the same. If you're making money trading, you're doing your future self a disservice by not rolling those profits into other areas, right? This is about being sustainable. This is about having other sources of income. This is about building your nest egg in your future. Your trading account should be one of many accounts that generates income. It's important to roll that into investments, whether that's in stocks, real estate, businesses, fixed income products, or otherwise, just so that you have a variety of income producing assets that can also grow their equity over time. And, if you're still dealing with debt in your life, as many people are, pay down that debt. One of the easiest returns on investment you're ever going to get in life, the most surefire return, is paying down debt. Because what do you have? You have interest you're not paying anymore, which is a guaranteed return in the sense that you're no longer paying it, right? So just something to take into consideration. So I navigated through the great financial crisis. It was wild, by the way. That was such a long time ago, though some of the memories that I formed back then still seem like yesterday. Because imagine waking up to a bidless market. What better way to appreciate how important risk management is than to wake up to a bidless ExxonMobil or a bidless Microsoft? It sounds crazy, but that was what was going on back then. That was really the situation that was taking shape, and it was pretty scary, but it was also good because going into it, it seemed like, oh, the market could never go down, everything's up and away. There was no reason to really manage risk in the conventional sense. Most people didn't really talk much about it, and then we get through it, and it really changed risk management and the outlook that people had about risk management for a generation. Now we're back to the time where we've had a whole generation that really haven't experienced anything like that, so it's interesting. So that helped me to understand more about how things come together. If you think about the plumbing of the markets, the role of monetary and fiscal policy, the importance of, econometrics or data on the economy, the importance of earnings, the importance of trends, all those things really got driven home back then. And I was able to get out of the way of the great financial crisis, mostly using technical analysis and spotting a potential double top in the S&P 500. But that wasn't like me saying, oh my God, there's going to be a crash. I'm getting out of the way. I know exactly what's coming. It was more like me looking at a chart and saying, boy, that could be a big area of resistance. I think I'm going to take profits here and see what happens next. And then, the unimaginable played out. So from that, I learned that, being a technical trader is great. Being a discretionary trader is great, but I needed to up my game. Because one of the things that I kept realizing is there's so many other variables that come into play that move markets. So My approach became much more systematic, much less discretionary. And that systematic approach is driven by momentum, price action, options flow, sentiment, positioning, volume profile, and the big picture. And it sounds like a lot, but when you start plugging it into models, when you start automating certain components of that analysis, it's actually not that intensive. I began working with Bookmap in 2022 because I saw great value in the way their program displays market data. And this is one of the cool things about it. I know there's different ways to view market depth. I know there's different ways to view order flow. I've really become acclimated with the way that Bookmap shows it. It helps me to get a better sense as to what some of the forces are that are moving the markets. So I really focus on order flow. I'm going to do a quick primer on why, because I think this is an important segue into Bookmap itself, right? You know, if we're talking about analyzing order flow, I think it's important to talk about why I analyze order flow. So let's get right into that. So the first thing is watching for differentials or deltas. You can see areas where there's aggression. You can see where one party is maybe getting a little bit more, I would say, motivated. Now, sometimes that's a good thing. Sometimes that can happen at like a point of reversal. Buyers start getting really aggressive, sellers start backing off, and you start to see price turn around. But the other times that you can look at deltas and kind of perk up your eyebrow and say, I wonder what this is going to turn out to do, is when you look at the session volume profile, you can see really large buy and sell deltas. And for example, if you have a really large sell delta and it's right at price and price starts moving up against it, you can imagine that some of those sellers were selling to open shorts, and the further away you get from that sell delta, the more likely it is they're going to want to cover those shorts, the more likely it is you have some motivated buyers, right? So deltas are important. There's a number of different types of deltas. We'll talk about that as we fire up Bookmap and get into the program. There's also the icebergs and stops. Icebergs are really important sources of passive flow, and there's very few programs out there that really allow you to sort them out and visualize them so you can see how they may be impacting the market. And I have a special kind of, I would say, sort of a way of screening out a lot of the noise with icebergs and stops. I get rid of a lot of the smaller flow because it's not quite as helpful to my process. So I'll show how I do that as well as we get into Bookmap. And then also exhaustive trading action, where one party gets offsides. I even created an indicator for this that's on the TraderAid Discord, the exhaustion indicator. But basically, when one side is getting way, way, way too aggressive, sometimes that can mark a turning point. Sometimes that can basically tell you they're getting a bit offsides and the market's about to turn around on them. So why do I use Bookmap to analyze that order flow? Mostly because the program brings it all together. It has powerful visualization. It combines key data on one screen, which is nice, rather than having to have 3 or 4 different screens we may be looking at, which is quite frankly distracting and a little bit mentally exhausting. There's a lot of value in having as much as you can without adding too much noise, right? You really want to focus on signal, but having a screen full of signal can be very helpful. It's also easy to layer on other features. If you're a programmer, my goodness, you can go to town on Bookmap. It's got a Python API, it's got a Java API, you've got kind of all the capabilities that you might need to take advantage of using this to be able to build a lot more, right? So I've built several add-ons for Bookmaps, both plugins, and I've also built capabilities inside, basically pulling in data that I factor with my own algo using the SPX options visualizer. So for me, it's been awesome because it's sort of like this foundation where I've got all this important and meaningful data that I can trade off of, but then on that foundation, you can build what is helpful to you. There's also a marketplace where they have other authors, plugins, and things like that. So I like that, the ability to layer on new features. So let's talk about a couple of key pivot levels to watch as we get into the market today. It is likely to be a day with somewhat upward bias, I would imagine, only because it's a holiday shortened week. You get a bit of a vol crush effect from that. We did get that sell down to about SPX 5900. That's a pretty powerful area of support. We appear to be bouncing off of it pre-market. So I wouldn't be surprised if we have somewhat of a positive bias today. Tuesdays tend to be somewhat constructive as well. And folks, I've got a couple deals to share with you all. First, start 2025 right, save up to 30% on Global Plus Annual. Don't worry, the code's coming right up. And also save 50% off the MBO bundle for your first month. That ends tonight. Those exclusive deals are right here. I'm going to keep this on screen for a moment so you can screenshot or copy and basically add these links and coupon codes to your notepad. If you're interested in picking up Bookmap, visit traderaid.com/bookmap. That's traderaid.com/bookmap. Right off the bat, if you scroll down to the bottom, you'll see the specials. You've got 40% off on those specials, but there's also the MBO coupon here, 50% 1 month MBO. You can use that for 50% off your first month of the MBO bundle, or you can get 30% off Global Plus Annual with the coupon 30% G Plus Annual. So again, keeping this on screen for just a moment so folks can copy this down if they're interested in getting a copy of Bookmap for themselves. And we are just about 17 minutes away from the market open. So let's start getting into Bookmap here. And if you still need these links or codes, let us know in the chat room and we can share them again with you all. So we're going to dive into the futures here. We'll do a couple things. We'll demonstrate a couple things today, just to get the most out of this platform. All right. So first of all, on screen, we have just the S&P 500. I'm going to check out these, and I'm using the beta version right now of Bookmap just to kind of check out what they've got going on in, I believe it's 7.6. So bear with me on that. So one thing that's pretty cool that you can do is you can use TradeMap Lite or TraderMap Lite to get rid of this order bracket. You can see this bracket around S&P 500 price. And often is the case that that's just a little bit annoying and distracting because it's kind of clogging up the current order book. So one thing that's pretty cool is you can actually filter that out, right? So you can set up a filter that removes that bracket and will show the S&P 500 contract without that liquidity bracket on there. So that's something that, if you're trading futures with Bookmap and you're not particularly thrilled about these order brackets, I think this is a really, really helpful thing to have available to you. So using TraderMap Lite to get rid of those brackets is something that, really regardless of how you're using Bookmap, I find the brackets aren't really constructive. They're not giving you any kind of helpful market information. So getting rid of them completely is quite helpful. And what happens is it creates a new contract over here. And you can see there's no more bracket of order book liquidity, right? So it creates this new symbol. And I'm able to just pull it right over. And the only limitation that I've noticed about TraderMap Lite or Pro is that they don't give you the stops and icebergs on the subchart, but I'm told by the Bookmap folks that that's something they're working on. So, it's pretty easy to do this for a contract, and you can, with TraderMap Lite, it's free. So you can use this on, on NASDAQ, on S&P. So for example, again, you go into your add-ons, enable TraderMap Lite, set up the filter to standard. Typically that's sufficient. Then, close it out, and you'll notice on the far right, you've got that new contract. You can drag it over if you want to kind of group them up. I like to keep the stuff kind of grouped up for organizational purposes. And you'll notice that it cleans up that bracket. So it's quite helpful, I find, for just the way that I'm trading. I don't really need that bracket of liquidity. I don't really want that bracket of liquidity. I find it distracting. So this just kind of cleans that right up. And I have set up the SPX options visualizer. If you're using this data add-on that I built, it works with TradeMap Lite. It works with TradeMap Pro. You just need to put a -1 at the end of the symbol. So if you're using the SPX options visualizer on Bookmap and you've got questions about using it with TradeMap Lite or TraderMap Pro, let me know. I can show you how to set it up. It's also out there in the documentation now. So just trying to make it super easy for anyone to be able to take advantage of some of these features. The other thing that I find really helpful for folks is to, kind of tune up the way you have your chart going on Bookmap. Like you may find that, for example, you want to tweak your heat map settings. I set up a bit of a lower cutoff and higher cutoff than default. That helps me to kind of tune out some of the noise as well. So that's another thing to take into consideration. How do you want to visualize your market data? I also use deltas on the session volume profile, which I think is really helpful. So if you're using the visual options on the session volume profile, making sure that you have the delta, so you're just showing the difference between the bid and the ask, is pretty helpful. Because if you don't show the delta, it's just a little more wonky to be able to visualize, where there are areas of aggression. If you put the delta on, you can immediately see where those areas of aggression may exist. I like having the view app and point of control. I think those are helpful to have on screen. You will often see price interacting with those levels. And it doesn't take too much time to configure this stuff and, get it going so that you can take advantage of it. And then once you have, simply save your workspace and it'll be available the next time you open Bookmap. I also do the same thing for the volume bars. So on the bottom, you have these volume bars, and they show similar to the bubbles. There's basically, if you have them set up, they're delta. That's how I have them set up. So there's a 15 bar width, solid volume bars, and then I use volume delta. right? You can cluster them if you want. That can just help to kind of group them together. And you can inherit that clustering from the dots if you want to, so that they just show, what the dots are showing, or you can apply that clustering to the dots. So it just depends on how you want things set up. Personally, I prefer it to just be none, so it's just sort of a raw view of the volume deltas. So let's check around the markets. We've just got about 7 minutes left until the opening bell. I'm going to pull this back. You can see overnight European session, it got a bit of a pop, and we've just been consolidating from there. So if we look just around the equity markets, Europe, Japan, pretty flat this morning. Small caps getting a sizable bid. Russell up about 0.6%. NASDAQ up about 0.25%. S&P up about 0.25%. So equity futures in the U.S. have a bit of a bid getting into the market today. Let's take a look at gold. Gold has had a bit of a period of consolidation recently. And that makes sense given how powerful the run had been. You don't want to see these things just go 100% parabolic and just keep going ad infinitum. You really want to kind of be careful about that stuff. If you see a commodity going absolutely bonkers, that's usually not a great sign. That's usually a sign that it's kind of getting into a state of euphoria, and often is the case that euphoria melts down. So the way that gold has been trading is actually healthy. It's sort of the stair step pattern higher. And from there, it tends to consolidate, right? So you have these big, powerful moves higher, then you have these periods of consolidation, and then you have these big, powerful moves higher. That's what you want to see in a commodity. That's the opposite of that euphoric parabolic move that can get us in trouble. So the sort of move that Bitcoin made lately, that would concern me. I feel like there's a pretty decent risk it could pull back to the 60s or 70s. But gold, the way that it's been moving, is actually much more constructive. So if it can consolidate here, it's sort of like building this coiled spring, and the path of least resistance, given the trend so far, is one that takes price higher. So we'll be watching gold this morning. It is a bit volatile, but overall, I think it still remains pretty constructive, just sort of consolidating here. And silver is another one that's had a bit of period of consolidation here overnight. It's actually taking a bit of a tumble here, down about 0.5%. Silver's chart does not look nearly as constructive as gold. And there are reasons for that. Silver is an industrial metal, and a good chunk of silver's industrial demand comes from China. And China has not been stimulating their economy commensurate with really what silver needs to get a sizable and durable bid. So that's something to take into consideration if we really want to be bullish of silver. My base case here has been China needs to stimulate in size, and they really have not. They've been talking a good game, but when it comes down to the brass tacks of actually, implementing these measures, they have not done nearly enough. So that's another thing that, just if you're bullish of silver, that's fine. I still think there's a really good chance for it next year to make a phenomenal run. But we need to see that industrial utilization pick up, because over half of demand for silver is industrial. So going into today, I would think silver's path of least resistance may even be a bit lower. And that would be something that would just concern me a little bit about wanting to take trades in this. I'd be more inclined to want to fade it, given the sort of overnight trend lower, and we're making new lows right now And we can see some bids coming in below price, that 29 bid, and just over that about, 29.06. And then we've got the 10-year note on screen. Now, I'm of the mind that I think yields can move higher. So we're on this longer term path of higher highs in yields overall, especially on the long end. And we have this sort of bear steepening process happening. And that means that the long end is moving up at a faster rate than the short end. And I've been saying for a bit that the 10-year note above 4.5% is the danger zone. Like once you start pushing above 4.5%, risk assets like stocks and crypto take notice. So, watching the 10-year just gives you a better sense as to, are we going to see some more of that pressure come in? This morning, you do see a little bit of pressure on the 10-year note overnight. It's still bid into today's session, but it's off of its highs. So again, I would be watching that one. It's just at about 4.533% today. But this is one to keep an eye on specifically because that rate can induce some pressure in the markets. Now, I'm not going to get into the big tech stocks yet. We're going to wait till the market starts trading, and we'll get into some of those. But we will check out Bitcoin. I'm going to just drag that a little bit over here as well. So Bitcoin is up quite a bit overnight. You can see that really had a strong bid from the European session. I mean, we got a little bit of equity demand, but it was really all about that high beta, long duration risk appetite in things like Bitcoin. Most of the crypto complex is soaring this morning. So a lot of the crypto adjacent stocks, MicroStrategy, Mara, Riot, all that sort of stuff, looks like it's going to have a decent bid today. So for all you high beta punters out there that are looking for sort of the day trades that could have a decent pop, I think that the crypto mining stocks and some of the other crypto adjacent stocks, Coinbase, things like that, they could probably have a pretty good run today with the way Bitcoin is trading ahead of the market. It does feel like that's the area where the market's probably going to focus its sort of high beta bid. And a lot of those are already up 3-4% pre-market, but if they trade anything like they've traded in the past, they tend to sort of magnify the underlying move in Bitcoin. And so Bitcoin's up 3.7%. These things are only up 3.3 or 4%. It suggests they could have some more room in the cash session. So that would be something I'd be watching, is these crypto adjacent stocks today, given how Bitcoin is moving and some of the other, crypto casino tokens as they were. So market's about to open here. We're going to watch the opening bell on the S&P 500 futures. I'm just going to take a look at a couple things here. Yeah, we've got a little bit of buyer exhaustion right off the bat. You can see that. That's from my indicator. And just seeing a little bit of selling pressure. Some of this is likely overflow from last trading session. You remember yesterday we kind of went out with a a bit of a whimper. The market kind of gave back a bunch of the gains off the lows towards the end of the session. There's probably some order overflow from that's coming through this morning. So that might have been a little bit of that quick peak down. And seeing a pop off those lows here, but I don't think the sellers are completely done yet. Also waiting for some of the options order flow to come in so we can have a better sense as to how that may pull things around. But as we're waiting for all of that, let's look at some of the majors here. Apple getting a bit of a pull off the bat here. But overall, not doing too badly, up about 0.25%. Amazon also seeing a little bit of pressure off the open. Still, though, up 0.43%. You can see a lot of that liquidity taking shape. Once the markets open, you start to get a sense as to where larger parties are interested in selling and buying. We can see right now there is more interest in lower prices than higher prices in Amazon. That delta of about 189,000 favoring bids over offers on the stock as we trade below the point of control and make new lows in the session. Alphabet, kind of a similar look here. You do have a lot more liquidity stacked lower in Google shares here, about a delta of 430,000. Stock's up about 0.1% off of its lows. Meta, pretty even distribution, but more interest in lower prices than higher. Stock's up about 0.2% here. 585, a pretty big level based on the distribution of liquidity. And Microsoft taking a bit of sell right off the bat here. Still up 0.1% here, but well off of its highs earlier. And there is more interest in higher prices than lower prices with the offers in excess of 100,000 versus the bids on Microsoft. Nvidia is selling a bit off the open here as well, off its highs. The stock trading down 0.08%, and there is more interest in higher prices by a pretty sizable delta, about 7.5 million more on offer than on bid in Jensen Huang's Nvidia. Tesla up about 1% here, kind of bucking the trend of the other big tech stocks that haven't had quite as much of a gain, but it seems to be giving that up as we watch here. There is more interest in lower prices on Tesla, a delta of about 665,000 with 3.2 million on bid. So we can see the stock had a nice little pop up here. There was a sizable offer rejected at 428, 14,000 on offer. And then it's just sort of been falling lower since then, down to that 420 bid area where there's about 40,000 on bid. That'll be a pretty important level. So mark that 420, almost as if Elon Musk is throwing the number out there himself. That could be an important area of support on Tesla shares this morning. Go back to the S&P. S&P seems a bit more resilient. Let's cross compare S&P versus NASDAQ here. Yeah, NASDAQ's also getting a decent bid overall. So even though some of the big tech stocks are showing a bit of weakness, including and especially things like Nvidia, NASDAQ 100's up about 1/3%. S&P is up about similar here. But a choppy trading session. This is not likely to be a particularly liquid session. Let's go back to S&P. Order book depth on the S&P right now, you can add up the offers and the bids. That's 31,000 order book depth. That's not anything particularly impressive. And we could see that 5,900 level SPX, which is about what, 59, 51 or so on ES. That is a huge area of potential support to watch. We could see it yesterday. We kind of crossed below it, went back up and really never looked back. Overnight, we got a bounce off that level as well. I think that's going to be the area to watch going into the rest of this week as well, as a sort of 5,900 SPX line in the sand where more and more options positioning is building. And it's about a delta of 50 handles with ES. ES being 50 points higher than that on the March 25 contract. Let's just zoom out a little bit on the order book. The really not a lot of very interesting bids and offers this morning. We had something down here, but they pulled that 354. It was down there around 59, 45 or so. And then we've got this 5,900, but that's kind of far away from spot to be worrying about too much. And then the next level to watch is just under 6,000. There's around 250 on offer, just based on order book distribution. But for now, market's making new lows. Remember, we started off today right off the bat with a bit of buyer exhaustion. So they're throwing these aggressive orders out there. And you can see it in the session volume profile too. There is this aggression on those deltas, those buy deltas. We're getting further and further away from where those implied buy to open orders were. So that does suggest that if that trend continues, you got a lot of folks up here that could become motivated sellers. They're getting more and more away from where they may have entered those contracts long. Let's take a look at the NASDAQ futures here. Pretty similar look, just kind of slowly moving down to new lows. There's not a ton of aggression being shown by sellers. They don't really need to show aggression to overwhelm buyers. Buyers are just not really putting up much of a fight here. And so Apple hit new lows recently. Nothing much to write home about. We're going to zoom this in some more. But yeah, you can see that sort of steady stair steps downward type of descent. So nothing disorderly, just, bit of selling, bit of profit taking on a stock that's done insane things with its price given the lack of insane growth that it's seen in its fundamentals. Amazon, another one that's also making new lows here. Just again, sort of stairs downward, nothing too, dramatic, but certainly some profit taking going on in the e-commerce giant this morning. And then Alphabet, not quite as pronounced as some of its peers, but still making new lows here. A big liquidity area down there at 190 to watch. So that's kind of interesting, about 10,000 on bid. And still more interest in lower prices here with the bid and offer delta being about 410,000 in favor of bids. Meta also making new lows here. And we can see that there is a fair amount of interest lower. 585 is probably the most noteworthy level near current pricing. So that would be an area to watch for potential support if we do start to really see a more meaningful pull. But we can see that it's not as much of a pronounced interest in lower prices as some of these other stocks, but it's still an 85,000 delta. So maybe like a 25% difference. And our friend Mr. Softy, or Microsoft, also making new lows. It really tried, though. You got to at least give it some credit. It tried. It made a new high, came back to the point of control, tried to come back up and make a new high again, and has just been kind of rolling over ever since. Decent amount of liquidity on offer on this one at 420. I mean, wouldn't you know it? All these stocks, wherever there's 420, there's always interaction. People like that number. But 26,000 sitting on bid at 420 in Microsoft, that's a level to watch if we see a more meaningful pull. NVIDIA also pulling back, a kind of similar pattern overall. 136 has 144,000 on offer, 135, 182,000 on offer. And this is a stock where there is actually more interest in higher prices today by a delta of 7.7 million. So nevertheless, you're seeing that sort of stair-step pattern lower. And then finally, Tesla. Tesla falling from grace. It pushed hard this morning up to 428, got that rejection we talked about earlier. And it's just been coming through. And you can see all these areas, these demand zones getting filled. That gives you a sense of that sort of three-way market auction, right? If there's more than enough supply, you can fill these demand zones. And that's what we're seeing today. Sellers have more than enough supply, at least so far on Tesla. And this is a stock where, like some of the others, there is a greater interest in lower prices. You can see that in that delta, 434,000 in excess on bids versus offers. Let's go back in. I'm imagining we're seeing some more pressure overall, and we've seen the S&P now making new lows. We are approaching that put wall vol trigger convergence area, and we should start to see some of the options flow trickling in now that it's getting into enough size. So we'll be looking out for that to give us additional directional clues. NASDAQ also having a tough time here, which makes sense. We just looked at all the NASDAQ leadership stocks, and they're all having a bit of a rough go, as it were. So that is something to keep in mind, just the kind of pressure that you're seeing here. It's not just the futures, it's, some of these underlying really big components are individually leading the market lower as well after having a somewhat promising pre-market session. So if we go back and look at it, just cash right now, S&P 500 is up 0.14%. NASDAQ is about flat, down 0.03%. And Russell is leading the way right now, up about 0.5% after having a pretty rough and tumble month. And Dow's up about 0.2%. By the way, folks, if you want to check out Bookmap, you can get your own copy for up to 40% off. Visit TraderAid.com/bookmap. If you'd like to check out what we're doing at TraderAid, visit TraderAid.com, learn more about us, take a 5-day free trial of our Discord. That's a 5-day free trial to check out all of our unique trading tools, ideas, education, and our awesome community. And we can see there is a fair amount of options implied resistance above at some of these really large gamma levels. And then that enormous call wall at SPX 6200. But we are very close to this put wall, which we're going to call just around 5950. That's something that I would watch pretty closely. Because we're likely, again, we've seen reactions there before. If we do go down to that level, we're going to get some kind of reaction. Likely at the first test, we get some kind of a bounce. But if it keeps testing there and we cut through meaningfully, that put wall vol trigger combo could lead to some pretty meaningful follow through. So it is important. And we're starting to see now the options flow coming through. from the CBOE. S&P futures now testing that point of control from below. And order book depth remains quite low, still 32,000 on the S&P 500. We do see the hot call getting some action. Warm call way up there. That looks like that's some more longer dated stuff going in there. But the hot call is coming in about 59.50. That's the same level yesterday. It got a lot of attention. And then the hot put around 58.50. So it's that same sort of 100-point distribution that we saw yesterday. And that kind of leads to a little more volatility if you think about it. If you've got that more widely varied opinion of where the market may go, then certainly that's going to add to some degree of uncertainty, right? That's going to add to some degree of potential realized volatility. And that hot call now looks like it's climbing up. Yeah, wow. We're starting to see a lot more excitement up there. It's about, call it like 53 points higher than current price. So certainly an interesting distribution of opinions playing out here. And again, it's a wide range, right? We're looking at 125 points. Hot call coming back down here just right away from spot. But again, the difference between the warm and hot call, not too much. So really what you're seeing here overall is there's more interest in higher prices. Put call ratio also coming in at 0.85% to start the day. So again, more calls transacting than puts so far. So right now the hot call basically trading 2x the most active two puts. That's also interesting. Let's take a look at some of the most active mega cap stocks here. Apple still stair-stepping lower on AAPL. It's like 251 really the big area of liquidity to watch near spot, and then 250, a huge area, about 50,000 shares on bid. Apple, another one where there's more interest in lower prices than higher based on that order book delta of 230,000 favoring bids. And Amazon about even in that order book, just a delta of 133,000 between the bid and offer. And Amazon looks like it's trying to push up off those lows. It made new lows not too long ago here. You can see in that stair step down from the open. And now it looks like it's trying to push back up through that area of offer liquidity at 222. Alphabet shares also similarly look like they're trying to put in a low here. Let's see if they're able to build some more acceptance above this point of control. There does remain a chunky amount of interest in lower prices on Alphabet, though. That 190 level could become a bit more magnetic with just almost double the amount on the bid side than the offer side in this order book. Meta, pretty even distribution between bids and offers. I mean, not nearly as drastic. It still favors the bidders by about 30% in excess of the offers. But this is another stock that's off of its lows and is challenging the point of control from below. So it's trying to put in a bottom. Microsoft really having some trouble getting off the mat there this morning, and Microsoft going right back to the lows. And there is more interest in higher prices on this stock. The delta 116,000 on offers. Nvidia kind of has a similar look as Microsoft. I mean, it really doesn't seem to have much interest from the buyers of yet, although we do have a fair amount of offers. So if any liquidity is starting to come through, excuse me, there's plenty of room in these offers here to absorb it. 140, 142, pretty sizable offers, but 145 is the biggest offer on the book. $145 on Nvidia has 1.1 million on offer in terms of shares. These are just large limit orders that kind of give you a sense as to where some of the other players have their liquidity parked. And you could say, well, why are they showing it? Well, they could have all manner of reasons for showing it, but you have to understand if you're iceberging, there are advantages and disadvantages. And one of the disadvantages of iceberging is that once your iceberg fills the first component of the order, you get kicked back to the line at the back of the line for who's getting served. So if you're trying to get rid of 1 million shares of Nvidia and you're breaking it up into 100,000 lots, so 10 lots, when you do that first 100,000 lot sale, let's say at 145, now you're at the back of the line and other people are going to get filled first. So why do people show their hand like that? Maybe in some situations they value the expediency of getting out versus kind of showing where they're interested in getting out and at what size. So obviously that's about 145 million plus worth of notional value just hanging out there. At the same time, what are you going to do? You've got to move that product, and if the iceberg order doesn't suit your parameters for the timeliness of exit, then you're just going to put it all out there in a limit order. So I think that's why you sometimes see those larger limit orders. And then we have, we have Tesla up here as well. Tesla still has a little bit more delta on the bid side, not a ton, but about 560,000 favoring the bids. And 400 is a huge level in Tesla. I don't think we're going to get anywhere near there today. But 410 on the lower side, and then on the upper side here, 425, 427, 430. Really big offers to watch. Tesla well off its lows, trying to put in a bottom as well, it would look like. And we can see that the hot call here getting a lot of attention, no longer in excess of the top two puts by about 100%, but it's still by about 50%. So we can see that it's more balanced. We have a midpoint on screen. That kind of gives you a sense that the options auction is more balanced. There's not one side that is strongly in favor right now. We can see the put buyers really gunning for that put wall vol trigger level. So you'll notice with the SPX options visualizer, I've done some consolidating. So now there's no overlapping labels. They're all in the same field. That just makes it a little easier to be able to visualize what's going on with any particular, price level, so that way all labels that apply to it are labeled at the same time. And now we can see the hot put has rolled lower. So the put wall and vol trigger just in isolation, no longer being as actively triggered or actively targeted by traders. But what is very interesting about this distribution here between calls and puts is it's a pretty large variance of price, right? This is almost 200 points from the hot put to the hot call. So that just gives you a sense that there is some uncertainty, at least in this early part of the trading session, about where price may go. But people are looking for a larger move earlier in the trading session. That typically portends to a higher chance of some volatility playing out. And volatility is two ways. When you say higher volatility, that doesn't just mean stocks going down. Higher volatility simply means larger moves and possibly more choppy trading conditions with an order book depth of just 33,000. And we're starting to see now puts getting more attention than calls. That's a pretty interesting flipping of the script. The hot put now, the most active strike on the S&P 500 contract. And when we're looking at these, we're going through every single strike on every single expiry. So some questions earlier. One was, do I think it is the algos that are making the price move in a bracket? Or, is the liquidity just moving in a range? It really is the algos. This is a market making algorithm. I'm not sure which trading desk is doing it, but it used to be something you only saw during contract rolls. And then from July on, it became sort of standard fare to just always see this bracket. So that's one of the reasons that I think the Bookmap team really put a lot of effort into TraderMap Lite and TraderMap Pro. And the cool thing is that TraderMap Lite's free. So if you get Bookmap and you're just really trying to look at S&P or NASDAQ futures without those brackets, it can automatically, apply that filtering. In fact, when you add the contract, it'll ask you, hey, do you want to use this to get rid of some of those brackets? We've detected some market making algos on there. So they've really added some additional intelligence to the program, which makes it pretty cool. So folks, this is going to do it for the Bookmap portion of the stream, Back to the Futures with me, Markets and Mayhem, as it is carried on their Discord and on their YouTube. I will keep this stream going, however, and I do want you all to also consider tuning in tonight at 5 p.m. for Navigating the Markets. That's 5 p.m. Eastern. I will be talking about my views of the market, big picture, longer term trends, all that sort of stuff tonight at 5 p.m. Eastern. But for now, the stream is going to go on. I'm just going to cut off the Discord and YouTube because Bookmap's got some other folks on schedule. So really enjoyed hanging out with you. I'll be back next Tuesday for another session at 9 a.m. So that's Tuesday, January 7th, 9 a.m. Eastern. Join me then for Back to the Futures once again. And if you are interested in checking out Bookmap, they do have some specials going on. You can view them on my Twitter to learn more. But if you want to get that 40% discount, visit TraderAid.com/bookmap. Scroll down to the specials. And if you want to check out TraderAid, we've got a 5-day free trial on our Discord. Visit TraderAid.com to learn more.